Hi, tax has become one of the biggest issues, and more people are becoming very concerned about the tax that they pay. According to the BBC, a quarter of the money the government expects to raise in 24-25 financial year will come from income tax. Income tax is the tax that you pay on your earnings. The UK system is a progressive system, which means the more you earn, the higher you pay. A client came to us, and the reason why he came was because he was about to receive a bonus, and the bonus was going to take him from being a basic rate taxpayer to being a higher rate taxpayer. And he didn't want to pay tax at 40%. And so that was the reason why he came. He came because he wanted to receive the bonus and at the same time reduce the amount of tax and keep him within the basic rate band. And so we sat with him and we were able to achieve this. By the end of this video, you're going to have 7 tips that you can implement to pay less in taxes legally. Tip 1 will save you at least £1,260. Tip 3 will save you up to £1,350. Tip 4 will save you up to £3,375. And the last tip is going to save you the most tax. And so stay around for it. But first, I need you to hit the subscribe button if you don't want to overpay tax in the UK. My name is Amma, a chartered accountant and a tax professional with over 10 years of experience from AB & Co. Accounting and Tax Services Limited. Before I show you the various tips that you can implement to reduce your taxes, let's try to understand how the UK tax system works. So for the 2024-25 tax year, if you earn any income up to 12,570, you pay no tax at all. The 12,570 is the tax-free personal allowance. Anyone earning up to this amount in the tax year do not pay any tax at all. The next tax band is any income up to 37,700. Any earnings up to this amount will attract 20% of tax. Anyone with earnings up to this amount is called a basic rate taxpayer. The next tax band is any income over £37,700 up to £125,140. Anyone within this tax band is called a higher rate taxpayer. You will pay tax at 40% in this tax band. The last tax band is called an additional rate, which is a total income of over £125,140. If your income falls within this band, you are going to pay tax at 45%. So let's use an example. Assuming your total income for the tax year is £55,000. You are classed as a higher rate taxpayer, but it doesn't mean the total amount of £55,000 will attract 40% tax. But rather, this is how it will be taxed. The first 12,570 will not attract any tax at all. The next 37,700 pounds will attract 20% of tax. And the last 4,730 will attract 40% tax. So you see, even though you are classed as a higher rate taxpayer, but you didn't pay tax on the whole amount of £55,000, but rather you paid 40% tax on £4,730. You don't want to skip any part of this video if you don't want to overpay taxes. So stay tuned. The first tip you can implement to reduce your taxes is called salary sacrifice schemes. So a salary sacrifice basically means sacrificing a part of your salary for a non-cash benefit. There are several salary sacrifice schemes around, and examples are cycle to work scheme, payment into a pension scheme, workplace nursery, and childcare vouchers. So this is how a salary sacrifice scheme will help you reduce your tax. Assuming you want to buy a bicycle, instead of buying the bicycle from your after-tax income, you can buy the bicycle from your pre-tax income. So the amount of the bicycle will reduce your gross salary before tax. Because of that, you're going to pay less tax. The amount of the bicycle will reduce your gross salary before tax. And because of that, you are going to pay reduced amount of tax. Again, as an example, if you sacrifice part of your salary into your pension scheme, the amount that you sacrificed into your pension scheme will reduce your gross salary before tax. And again, that will help you pay less amount of tax. Let's see an example. Assuming your gross income per tax year is £55,000. If you don't sacrifice any part of your salary, your tax and NI will be £12,543 and your take-home pay will be £42,457. On the other hand, if you sacrifice £3,000 into your pension pot, this is how your tax and NI will be. Your tax and NI will be £11,283 and your take-home pay will be £42,717. So you see, with a salary sacrifice amount of £3,000, you have saved tax at £1,260. And in addition to that, your take-home pay is much higher than if you don't sacrifice anything at all. So that's an example. That's salary sacrifice for you. You're going to save at least £1,260. And remember, the more you sacrifice, the less your taxes, the more your take-home pay. That's salary sacrifice. But that is nothing compared to what you can save with the next tip. So stay around. The next tip that you can use to reduce your taxes is utilizing all allowable expenses. There are a lot more allowable expenses that you can use to reduce your taxes. But for this video, we are going to concentrate on only 3 of them. The first one is called use of home as an office expense. And here I'm going to split it into 2. I'm going to split it into what an employee can claim and what a self-employed can claim. So if you are an employee and you must work from home because, for example, your employer doesn't have an office or your work requires you to work far away from work, you are allowed to claim a proportion of your gas and electricity bill. Please note, you can only claim a proportion of your gas and electricity bill. If you have a phone, you can claim a proportion of business calls in addition to a proportion of gas and electricity bill. This is what an employee can claim. Alternatively, HMRC has a flat rate amount of £6 per week or £26 per month. If you don't want to claim a proportion of your gas and electricity, you can use that. If you decide to use HMRC's flat rate amount, you don't need to keep any evidences at all. But if you decide to use a proportion of your gas and electricity, you need to keep receipts as evidences. A self-employed, on the other hand, can claim, in addition to a proportion of gas and electricity, can claim rent or mortgage interest, cancel tax, internet, and a proportion of telephone that they use for their work. You can claim a proportion of all these costs from HMRC directly. Again, keep receipts as evidences. If you decide to use, again, the HMRC flat rate, you don't need to keep any receipt at all. You can claim for the current tax year and previous 4 tax years. A proportion, I mean, assuming in your house you have 4 rooms, excluding toilet, kitchen, and bath, and you use 1 room as an office, you can claim a quarter of all the various costs I have previously explained. So this is use of home as an office expense. The next expense is professional fees. If your work that you do requires you to pay professional fees, you can claim for the entire cost from HMRC directly. In addition, if you have to pay annual subscription fees and the work that you do relates to the profession, you can claim the entire annual subscription fees. Please note, the profession must be on the list of HMRC approved profession for you to be able to claim the expenses previously explained. Any of these expenses will reduce the amount of tax that you pay. The next expense that can help you reduce your taxes is uniform. Please note, a uniform is a set of clothing that identifies you to a particular profession, which means your normal daily clothes that you wear to work, you can't claim for the cost of those. You can only claim the cost of repairing, replacing, and cleaning the uniform. You cannot claim the initial cost of buying the uniform. Again, you can claim the actual cost of repairing, replacing, and cleaning, or HMRC has a flat rate amount per tax year for each profession. All you need to do is to go through the list, identify your profession, and then use the amount to claim it directly from HMRC. Please remember, any of these allowable expenses, if your employer bears the cost, you can't claim it back from HMRC. You can only claim it back from HMRC if you are the one paying for all the costs explained previously. Again, you can claim for the current year and the previous 4 tax years. The next tip that will help you save tax is massive. Stay tuned for this tip. In the UK, if you receive bank interest, if you receive dividend, you pay tax on the amount. If you are a basic rate taxpayer, you start paying tax on an interest amount of over £1,000. If you are a higher rate taxpayer, on the other hand, you begin to pay tax on any interest amount over £500 per tax year. And so, if you want to avoid paying tax on your interest, make use of ISAs. Any interest, any dividends earned within an ISA attracts no tax at all. And because of that, you reduce the amount of tax that you pay in the tax year. As long as your interest that you have received, your dividend that you have received is within an ISA account, you will not pay tax on it at all. And this reduces the amount of tax that you have to pay per tax. So assuming you have £3,000 of interest in an ISA account, look at how much you're going to save per tax year. If you're a basic rate taxpayer, you're going to save £600 per tax year. For a higher rate taxpayer, you're going to save £1,200 tax year. And if you're an additional rate taxpayer, you are going to save £1,350. This is massive. Make use of an ISA account to save you this massive amount of tax. The next tip is going to save you £3,375. But before then, please subscribe to our channel if you don't want to overpay tax. The next tax tip is by the use of rent a room relief. If you have a furnished room in your home that you let out, you can receive up to $7,500 from a rental income without tax at all. This is because of the rent a room relief scheme. As long as the rent you receive is up to $7,500 and the room that you've let out is furnished, you qualify for the rent a room relief. And the amount that is covered by this relief is $7,500. Please note that you can either opt in for this rent a room relief and claim the $7,500, or you can use the usual rental expenses if you believe the total rental expenses are going to be over the rent a room relief amount of $7,500. Please note, a house that has been converted into flat cannot benefit from the rent relief scheme. If you are a basic rate taxpayer and you make use of the rent a room relief scheme, you are going to save £1,500 per tax year. If you are a higher rate taxpayer, you're going to save £3,000 tax year. If you are an additional rate taxpayer, you're going to save £3,375 from the use of rent a room relief scheme. This is another tax tip that will help you reduce your tax in the tax year. The next tax tip is, if you own any investment, if you own any assets that generates income for you, and you are either a higher rate taxpayer or an additional rate taxpayer, you may want to consider transferring the income into your spouse's name, especially if your spouse is a basic rate taxpayer. This is because the income will be taxed at 20% instead of being taxed at either 40% or 45%. And that will also save you tax in the tax year. For example, if you have a rental property that is in joint names and you are a higher or an additional rate taxpayer and your spouse is a basic rate taxpayer, you can transfer the income with the use of Form 17 onto your spouse's name, and that income will be taxed at 20% instead of 40 or 45%. The next tax tip that you can use to reduce the tax that you pay per tax year is with the use of a limited company. I say this, you may be asking, why a limited company? If you are an employee or a self-employed and you've already exhausted your basic rate band, it means if you have any other side hustle, you're going to start paying tax at 40%. And instead of doing that, you can set up a limited company for this side hustle. This is because you and the limited company are classed as separate entities. And so, even though you'll be working for the limited company, the income that the limited company receives is not yours unless you pay yourself a dividend, and the dividend tax rates are much lower. Therefore, with the use of a limited company, you can save yourself a lot more taxes if you expect to earn over the basic rate band as a side hustle. Consider using limited company. The last tax tip that I told you will save you the most tax is here. Before we move on, please subscribe to our channel if you want to save tax. The last tax tip is making sure you utilize all your personal allowance. The personal allowance amount in the beginning I said for the 2024-2025 tax year is $12,570. Any individual with an adjusted net income of over £100,000 begins to lose £1 for every £2 of your personal allowance. And in fact, you lose it all if your adjusted net income exceeds £125,140. If you lose the personal allowance, you are going to pay an additional tax of up to £5,656. And you don't want to do that, which is why I said this will save you the most tax. Make sure your adjusted net income is up to 100,000 and it's never above 100,000. And so all the previous tips that I've given you will help you stay within up to £100,000 so that you don't pay excessive amount of tax. I hope this video has been useful. Thank you for watching. I hope to see you watching our next video, even saving you more tax.